Imagine trusting someone with your entire life savings, your retirement, your children's future, everything you worked for over decades. Now imagine finding out in a single phone call that none of it ever existed. That's what happened to thousands of people on December 11th, 2008, when Bernie Madoff, one of the most respected names in American finance, a former chairman of the Nasdaq Stock Exchange, confessed to his sons that his entire investment business was, in his own words, one big lie. On paper, client accounts showed balances totaling around $65 billion, but those numbers were fiction. Every statement, every profit, every return made up. For decades, nobody knew. Not his clients, not the regulators, not even his own family. This is the story of the greatest financial fraud in human history, and the man who pulled it off, hiding in plain sight on Wall Street for over 4
To understand how Bernie Madoff fooled the world, you first need to understand why everyone trusted him so completely. When the scandal broke at the end of 2008, Bernie Madoff was one of the most venerated people in American finance. Madoff founded Bernard L. Madoff Investment Securities, LLC in 1960, starting with just $5,000 in savings. He built it into one of the most powerful trading firms on Wall Street. By the late 1980s, his firm was handling around 5% of all trading volume on the New York Stock Exchange. He also served as chairman of the Nasdaq stock market during the early 1990s, and Madoff Investment Securities was at one point the stock market's biggest market maker. This wasn't some backroom fraudster. This was a man who helped shape the modern financial system. And that reputation was his most powerful weapon. Madoff cultivated close friendships with wealthy, influential businessmen in New York City and Palm Beach, Florida, signed them as investors, paid them handsome returns, and used their positive recommendations to attract more investors. He exploited an air of exclusivity to attract serious, moneyed investors. Not everyone was accepted into his funds, and it became a mark of prestige to be admitted as a Madoff investor. People begged to give him their money. And Bernie Madoff.
Here's how the scheme actually worked. A Ponzi scheme is deceptively simple. You take money from new investors and use it to pay returns to existing investors. As long as new money keeps flowing in faster than people want their money back, the whole thing keeps running. Madoff's genius, if you can call it that, was making it look completely legitimate. While most Ponzi schemes promise outrageous, impossible returns, Madoff was careful. He promised steady, consistent gains of around 10 to 12% per year. Good, but not suspiciously good. The kind of returns a skilled investor might actually achieve. He even invented an elaborate fake investment strategy, something called a split-strike conversion, complex enough that most investors didn't fully understand it, but sophisticated enough to sound plausible. The scheme began in the early 1970s, and by the time Madoff was arrested in December 2008, had defrauded as many as 37,000 people in 136 countries out of up to $65 billion. His victims included the famous film director Steven Spielberg, actor Kevin Bacon, and Nobel Peace Prize winner Elie Wiesel, as well as ordinary investors, but also charities, pension funds, hospitals, organizations that had given Madoff everything and would lose everything. And despite several warnings raised over the years, the Securities and Exchange Commission, the government body supposed to protect investors, failed to uncover the scheme despite several tips from concerned citizens. The fraud ran for decades, hidden in plain sight.
In the end, it wasn't a brilliant investigator who brought Bernie Madoff down. It was the 2008 financial crisis. Beginning in September 2008, as securities markets suffered steep declines, investors scrambled to retrieve their money from the Madoff fund in order to cover losses elsewhere. Between September and December 2008, investors pulled approximately $7 billion from the company. For the first time in decades, more money was going out than coming in, and there was nothing behind the curtain to cover it. Madoff made desperate calls. He tried to raise emergency cash from associates. Nothing worked. On December 10, 2008, Bernie Madoff called his two sons, Mark and Andrew, who worked at the firm, into his apartment. He told them he had something to confess. He told them the investment advisory business was a fraud, that it had always been a fraud, that he was finished. The next morning, his sons called a lawyer, and the lawyer called the FBI. On December 11, 2008, Bernie Madoff was arrested and charged with 11 federal felonies, including securities fraud, wire fraud, money laundering, and perjury. When FBI agents arrived at his apartment, Madoff didn't resist. He simply said, "There is no innocent explanation."
The numbers alone don't capture what Madoff actually did. Think about what $65 billion really means. Charities that had donated millions to hospitals and universities wiped out overnight. Retirees who had trusted Madoff with their entire life savings left with nothing. A Holocaust Survivor Foundation run by Nobel Peace Prize winner Elie Wiesel lost $15 million. The collapse of the world's largest fraud scheme devastated thousands of lives. Victims included charities and pension funds that invested money for people working paycheck to paycheck, who were relying on their pension accounts for their retirements. And the personal tragedies went deeper than money. Mark Madoff, Bernie's own son, the one who had reported him to the FBI, never recovered from the shame. 2 years after his father's arrest, on the second anniversary of Bernie's confession, Mark took his own life. The Madoff family was destroyed. The victims' lives were shattered. More than 12 years after uncovering one of the biggest financial frauds in Wall Street history, lawyers are still working on recovering money for the thousands of victims.
In June 2009, a federal judge sentenced Bernie Madoff to 150 years in prison. He never showed remorse in any meaningful way. He blamed his clients for being greedy. He suggested the banks that fed him investors should share the guilt. He died in federal custody in April 2021 at age 82. But here's the question that still haunts this story. How did this go on for so long? The SEC received multiple warnings about Madoff over the years, from analysts who said his returns were mathematically impossible. The regulator investigated and walked away. Every time. Bernie Madoff wasn't just a fraudster. He was a mirror, reflecting back exactly what people wanted to see. Consistent returns, a trusted name, an air of exclusivity. And that's the most dangerous kind of fraud. Not the one that looks suspicious, the one that looks perfect. Because when something looks too good to be true, even if it's not spectacularly good, just consistently, reliably, safely good, the right question to ask is always, how?
Bernie Madoff stole $65 billion, but he couldn't have done it alone. And the full story of who helped him, who ignored the warnings, and how thousands of victims are still fighting for their money today is even more disturbing. If you want to see more stories like this, subscribe. A new financial collapse every week.
And drop a comment below. Did you think Madoff deserved 150 years? Or should the banks and regulators who looked the other way face justice too? Thanks for watching Financial Collapse. See you next week.